Should you subscribe to Sai Life Sciences IPO? Well, before deciding on that, let's deep dive into this business. Starting off with key issue details. So the issue will open on December 11 and it will close on December 13. If the price band, if you see, is set at between rupees 522 to 549 per share, and the total issue size is set at around 3000 crore, out of which fresh issue is at 950 crore, and the lot size, if you see, the lot size is at minimum 27 shares. Now let's analyze what is the business of this company. So this company is a contract research, development and manufacturing. Think of what Divi's lab does or what Syngene International does. So in a layman language, in a simple language, there are innovator companies. So an innovator company like Pfizer. So Pfizer will say to Sai Life Sciences that, see, here is a drug, I want you to discover a drug, to do research and analysis or to research and development, and then you only manufacture the drug. So Sai Life Sciences will discover a drug, will research on it, will do development on it, and then at the end will manufacture that product for Pfizer. So Sai Life Sciences is an end-to-end services across drug discovery, development and manufacturing value chain. Now moving on, if you see, their CDMO product portfolio includes more than 170 innovative pharmaceutical products. So in short, Sai Life Sciences is a CDMO company. If I were to say about industry dynamics, so the CRDMO, that is the CDMO market, is actually projected at $250 billion, and this is projected to grow at 13% CAGR through FY27. So, kind of double-digit growth that we are seeing in this industry. Indian firms are, so basically the Indian CDMO companies are at, benefit. Why? Because Indian firms are capitalizing on small molecule, and the growth drivers for Indian CDMOs are, one is these cost efficient manufacturing that Indian company has, then increasing FDI that we are seeing across the companies, and also the government PLI scheme. These all things are actually positive when it comes to Indian CDMO companies. Also, one interesting thing to note here is the US efforts to diversify from China is actually presenting opportunities for Indian CDMO companies. China plus one, we are hearing everywhere. So this is also one of the reasons why the Indian CDMO companies will benefit going ahead. Now let's see what Sai Life Sciences will do from the IPO proceeds. So remember, I told you that out of the 3000 crores of IPO, 950 will be through fresh issue. Now out of that 950, 720 crore will be used in repayment of borrowings, and rest will be used for general corporate purposes. And if I were to talk about key risk, so one is, now we all know that, so there was this news yesterday that US Biosecure Act is actually out of the key defense bill, and so there is uncertainty about US Biosecure Act, and this may impact the pace of supply chain diversification. So this is one of the risks that Sai Life Sciences has. Also, the other risk that this company has is regulatory action may impact revenue and customer relations for the company. So these are the two key risks that this company has. Now speaking about the valuation, let's figure out what its peers or how much its peers are trading at. So the peer companies include your Divi's Lab, again a CDMO company, Suven Pharma, Syngene. Now just note that the interesting thing here is, look at the PE ratio, that is price to earning ratio. All are trading at a premium valuation. Now why? One is the CDMO industry is growing at a double digit. Huge opportunity is there for Indian CDMO companies. One of the reasons why we are seeing this premium valuation to all the companies. The other reason is that every company, every peer company has some of the unique advantage. This is the reason that we are seeing the peer valuation for all the peer companies. And let's see what Sai list at. Now talking about the financials of Sai Life Sciences, look at the revenue. So if you see the CAGR growth from FY22 to 24 and including H1 FY25 as well, the company has been growing at almost 30% CAGR. While look at the net profit, huge growth in net profit. Now in RHP, company has mentioned that in H1 FY24 company saw a huge uptick in profit. Now this, what was the reason? So as per their RHP, low base in FY22 was the reason that they are seeing huge growth in profitability. So good growth in revenue and huge growth in net profit. Also one of the reasons why we are seeing that spurt in net profit is in all the CDMO companies. So CDMO is a lumpy business, is an uneven business. This is also one of the reasons that we are seeing this lumpiness or a huge spike in the profitability. Now the investors' favorite question, should we apply to this IPO? Well, according to Aditya Birla Money View, this IPO is a pricey bet, but CDMO or CRDMO is poised for strategic growth, which will be advantage for this company, and Sai will be benefited from strong sectorial tailwinds. Now what is the end viewpoint of that? So according to Aditya Birla, they are actually recommending subscribing to this IPO for long term gains. So this is all about Sai Life Sciences IPO. Well, do let us know, are you subscribing to this IPO or not, and stay tuned to NDTV Profit.